Hi, everyone, and welcome to our Fall Bookkeeping Basics webinar. This is the first webinar for our winter webinar series. We're really glad that you're here tonight, so thank you for taking the time to join us this evening. And, winter is the perfect time to slow down a little bit, take a breath, and then look at the numbers behind your farm. So our goal with this is really simple. We just want to make bookkeeping feel less overwhelming and give you tools that you can actually use when you're closing out your year. So for those who are new to us, we would love to tell you about good agriculture. So I'll quickly introduce ourselves, and then I'll introduce myself, and then I'll pass it on over to Alex. So good agriculture helps farmers get started, understand their numbers, and make better decisions without the stress of doing it alone. We do the bookkeeping for you. We do financial reporting. We help find grants for our farmers and help farmers clean up their books so you know exactly where your farm stands, especially heading into tax season. So as I said, that's a bit about good agriculture and me. My name is Reba, and I am the marketing and sales lead for good agriculture. So with that, that means that I get to speak with you all before you get to speak with Alan and the team to get started with your books. With that, we have a conversation just to get to know you, get to know what your goals are for the farm, and try to find the tier that fits you best. So nice to meet you all, and I'll pass it on over to Alex.
All right. Hi, everybody. I'm Alex. I am the CEO of Good Agriculture. We are a small business, so that means I wear a lot of hats, just like you guys do. So I, help with all of our day-to-day operations. I help Reba on the sales side. I help Alan on the customer delivery side. And I get to lead a lot of these webinars, which is super fun. So I'll be doing most of the talking tonight. But if you guys do decide to get some help from us on the book side, Alan is actually going to be your main point of contact. And so he's going to be supporting tonight, answering a lot of questions and kind of jumping in with some color commentary. So, Alan, you want to introduce yourself real quick?
Yeah, hey everybody. I'm the farm finance lead at Good Agriculture. I've been here for over 2 years now, helping farmers achieve financial clarity through, helping set up their books and do that whole monthly process and just make sure that, your financials are up to date as quickly and accurately as possible. So, yeah, I'm excited to get this webinar started.
All right. So some ground rules for the webinar. So feel free to jump in and ask us questions as we go along. Don't feel the need to wait until the end. So we have a little chat feature. Reba and Al are going to help me monitor the chat and see if we have any questions. Also, feel free to ask specific questions about your farm and your context. What we're talking about is pretty dense stuff, and kind of walking through an example or two of what this looks like in the real world can be really helpful for folks. So like I said, feel free to ask specific questions. There's also no such thing as a dumb question. This stuff is pretty complicated, and we know that you guys are great farmers and ranchers, but you may not have degrees in accounting like Alan does. So just whatever comes to mind, feel free to ask. And yeah, be as engaged as you want. Use the chat. Feel free to raise your hand, come off mute. Just help us help you as much as possible. So we're going to actually do a little bit of an icebreaker question and just a test of the chat. What is the best $100 or less purchase you've ever made on your farm? So go ahead and type, and we'll make sure that chat feature is working for everybody. I have to say, these Good Agriculture beanies we got last year have been one of our best $100 or less purchases. I've been wearing this thing every day. Now it's like finally gotten cold here in Georgia. Are we getting any answers in the chat? Is that working okay?
Yes. We got good warm socks.
Ooh, good one.
That's really nice. We got ammo. Part of my farm biz is a hunting biz.
That's a good one.
Let's see,
Although
buckets.
ammo's expensive. I'm surprised that was $100 or less.
Yeah, I like buckets. That's a nice.
And then we see that Jennifer says her biggest is a chicken plucker, but it was a little bit more than 100.
Yeah, that's a good answer.
Delia said hot clothes.
All right.
Wow.
Cool. Well, feel free to keep using the chat there. So what we're going to cover today, so we already did introductions. We're going to do a little spiel on why bookkeeping is important. And then we'll get into the good tactical stuff of how to actually set up your books, how to keep up with your books, how to handle all these different kind of, accounting things. We'll do a very quick overview of financial statements at the end. And then we'll give some additional resources at the end. So, there are a few goals we had in mind. So, teaching folks how to set up books, to maintain books, to know the differences between different types of accounts you use in accounting to keep track of everything, and to help folks get ready for tax season, which we know is coming up. And also it's operating loan season for a lot of people. So anyone who's getting ready for a loan application, want to make sure all your stuff is in order. So again, if you guys can use the chat, we'd love to hear what your goals are for the session. Feel free to say, just number one, 1, 2, 3. Actually, it's something else. My goal is X. So that way we kind of know what to focus on while we've got y'all.
Okay, and as they are dropping their numbers in the chat, we had a question from Maya just asking, will this presentation be shared? And trying to determine how furiously she should be taking her notes. So Maya, this will be shared, and this webinar is also being recorded, so you can go and review it again.
Good question.
Okay, so we're seeing a couple 4. We see 4, 2, all, which is 1 through 4. Sean also said all. Primarily 1 and 2 as a brand new operation, and we see a couple more 4s in there.
Yeah, we love new operations starting off on the right foot because it's much easier to do things the right way from year 1 than, be 5 years in and have to go back and fix everything.
And Alex, before you get started, Jennifer asked, do you use or recommend a specific bookkeeping software?
That is like almost it's like 2 slides from now. So just hold that question. It's a really good one. I mean, all of y'all are spending, an hour and a half of your evening with us learning about bookkeeping. So you all clearly know that bookkeeping is important. But, just a couple of things we want to highlight. Everyone talks about tax season, but, the real reason that bookkeeping is important is for your own business success. We've seen lots of examples where people just don't really know where they stand, what's driving their profitability, and getting a clear set of numbers really helps with that. We've seen that when we start working with farmers and get their books cleaned up and start to get those financials to them on a regular basis, they get significantly more profitable just because they know, what's driving that profitability, and like where they can make improvements in their operation. And then of course there's tax season. It's coming up. It's 4.5 months away. And we want to make sure that tax season is easy as possible because you already have your profit and loss statement and you just got to print it out, send it to your CPA, and then you should be done. And then loan and grant applications, farming requires a lot of upfront money, and people generally don't want to give you money if you can't prove you can steward it well. So having a great set of financials makes you a much better applicant, and really builds that trust for lenders.
Yeah, if I could maybe jump in there with some more comments there. Another, obviously, yeah, bookkeeping on these high levels is important. Just to give some specific examples, we work with a lot of customers who, they'll come to us and we'll do kind of a really large cleanup, oftentimes in the, anticipation for the need to file taxes, and it's kind of, this kind of rush. But what we really love seeing is once then they've been working with us for over the course of a year, the next time around, it's not this big kind of like, oh, we got to get everything put together. It's basically just taking that monthly process that we're used to and applying it to that very last month of the year, and then just being able to see that go way more smoothly. Seeing that, and that applies to loans as well. So you got to keep track of your principal and your interest. And instead of having to go dig up statements, if this is something that we're keeping track of on a month to month, that's another reason why, this bookkeeping is so important. And then another just quick example, just simple profitability. Sometimes on the day to day, maybe it feels like, yeah, I think things are generally going good. You're looking at the bank account, it looks decent. But then when you really do a in-depth analysis, especially depending on how detailed you get into your bookkeeping processes, you can actually start making some better business decisions and saying, we worked with a customer who they were doing multiple livestock operations. They decided, the hog feed that they were purchasing was way too high, and they just had to move on and focus on their beef cattle and their broilers. So just a few examples there of just kind of in the real world why bookkeeping makes a massive difference in your operation.
So quick show of hands in the test of the hand raise feature. Whose books look like this today? Just like random spreadsheets that may or may not be kept up with, or, our favorite shoebox full of receipts. All right, got a hand raise. All right, got a few brave souls admitting to this. All right, you are in the perfect place. So getting back to Jennifer's question of what do you recommend here? So there's a few different ways to track your books. These are kind of from the simplest on the left to kind of the most involved on the right. So you can start with paper ledgers. They are simple, they are cheap. If you have a smaller business or you're new, these might be a good place to start. The only things to be careful for here is because it is paper, there is nothing checking your math. So they can be error prone. And they do require you to actually sit down and write in a notebook, which, it can be a lot of manual work, especially if your business is getting bigger and you're starting to have more transactions each month. And then a lot of people will graduate from the paper ledger into the spreadsheet. Again, these are free. They are still on the easier side of stuff, especially if you have some experience with spreadsheets. They will do the math for you, which is nice, but they can still be error prone if, you're not adding, you didn't type the formula incorrectly, or, you copy and paste something wrong. But again, if you are a simpler business, this can be just a great, easy way to get started. We actually have some Excel spreadsheets for how to track your books as a farm. Reba, we can share that after this, right?
Yep, we can do that.
Cool. And then I'm sure a lot of you guys have experimented with some of these accounting softwares before. There are a lot of them out there. I will say for the softwares in general, if you as your business grows, you're going to need one of these. It's just very hard for like a larger business to track everything on a spreadsheet. Now, the downside is they have a monthly cost. You do have to pay them every month. And the learning curve on these things can be pretty steep. I'm going to compare like Xero to QuickBooks really quick. So QuickBooks has a ton of capability and it does a lot of things. You can have your books and your invoicing and your payroll all in one place. But because it is so feature rich, it is very hard to figure out at first. Xero is a little simpler. It's a little more user friendly. But it doesn't have as many features as QuickBooks. So, just depending on your farm situation, one of those might be better than the other. Those are just the two we have the most experience with. There are also farm-specific versions of these things out here. So I think the two or three biggest ones that we know the best are Ambrook, Farm Raise, and Traction Ag. They have similar functionality to QuickBooks and Xero, but they are designed for farms. So, those might be worth looking into as well. Jennifer, did that answer your question, or like any more specific questions of like, hey, I'm looking to do A, B, and C. What's going to be the best option for me?
Jennifer said yes. And Sean asked if you can compare Ambrook to QuickBooks.
Yeah, so Ambrook is a smaller company and it's focused specifically on farms. So, for example, like when you set up your account, it'll be kind of set up for a farm where there's room for like your tractor loan and your fertilizer and all this stuff. Whereas QuickBooks, when you open it up, it'll give you stuff like office expenses, computer equipment, and like stuff that's not quite as applicable to a farm. So QuickBooks, you kind of have to like, customize it a little bit to make it work for a farm. But on the flip side, QuickBooks has a lot more features. So again, like invoicing is easier, payroll is easier. And there's more integrations, like if you use Square or Shopify for your sales, those things tend to tie into QuickBooks better than one of these farm-specific softwares, just because QuickBooks and Xero are bigger companies and they just have, more software developers on the team to integrate with more stuff. Yeah, so they're both worth checking out. But yeah, those are some of the differences we see. Any other questions on the different tools that are out there? All right. So what I'm curious what you guys are using today. Like, nothing is an answer. Like, I'm just not doing my books today. There is no shame in that. That's why everyone's here. Is anyone using paper? Are people using spreadsheets? Are people using accounting softwares? Does anyone have a service provider who's just doing it for you? Where are we today?
Okay, so we're getting some responses now. So a few are saying QuickBooks Online. One says QuickBooks, Bookkeeper, and Excel. We have
Wow.
spreadsheets, and another one is QuickBooks Online.
Okay, cool.
Jennifer said spreadsheets, but we hate it.
Yeah, I mean, all of these things have their pluses and minuses, and the minuses can be quite aggravating. So yeah, we've gotten calls from people saying like, all of these things, I hate them. Please give me another solution. All right, so especially for the new farmers in the crowd who are starting from scratch, just a few things around setting up your finances are going to make your life a lot easier. So the first one, please set up separate farm accounts. Like separate out your farm expenses versus your personal expenses. It just makes everything so much easier. So get a second bank account. If you use credit cards, get separate credit cards. And do your best to like split it out as much as you can. If you need to go to Home Depot and check out twice, once for the personal stuff, once for the farm stuff, please do that. You will thank yourself later when it comes time to go through all this stuff. This is especially helpful for vendors where it could be a farm expense, it could be a personal expense. You just don't, can't tell from just looking at it. So if you're buying stuff on Amazon, or again, Home Depot is a really common one, or, maybe, Tractor Supply has a lot of lawn care stuff used for your personal house. If you can separate that, you know immediately, okay, like this was a Tractor Supply purchase on the farm credit card, so I know it's on the farm. And that way you're not missing any of those expenses that you could deduct at tax time. Secondly, if there are folks who are selling direct to customer, try to minimize the number of sales channels. I know it's tempting to take cash and Venmo and Cash App and PayPal and Square, but then, at the end of the month or year, you got to go through all those and be like, okay, how much did I sell from this channel and this channel and this channel? And it just really complicates it for yourself. The more you can try to keep it all in one place, the easier your life is going to be. And then come up with an expense management system that works for you. So, people like to categorize things in all kinds of different ways. But if you don't know where to start, we recommend by Google IRS Schedule F. So this is the farm tax form you will have to fill out at the end of the year. And you can see they have a bunch of farm expense categories here. So like feed, fertilizer, freight, etc. And so if your books are already set up to use these categories, it makes filling out these boxes really easy at the end of the year. So again, feel free to customize these and make them work. So you can see there's room for other expenses. But this could be a really good place to start. Keep track of sales by product. So again, especially if you're growing lots of different things, keep track of all those different items. So, how many chickens are you selling versus pounds of ground beef versus different steaks. If you take the time to set up those items, especially if you're using an e-commerce software ahead of time, then again, it makes it so much easier to keep track of, how much you sold of what. We've had a lot of farmers where, you know, they're using Square and they want to integrate that Square data into their books so they have a really good view of, you know, where did all the revenue come from, but then they didn't set up their items in Square. And so the Square reports just come as like, you sold $540 of mystery items, and then it's not helpful for you. The last one, have your loan schedules on hand. You know, make sure these are, you know, printed out next to your computer or saved electronically somewhere you can easily find them, because you'll need to know how much you paid in principal versus interest in these payments. And again, if you just have that schedule handy, it makes it a lot easier when you don't have to like track it down every month. And then a word about checks. So I know we love checks in agriculture, and a lot of vendors only take checks. But checks can be really hard to figure out in your bookkeeping. So here's a, you know, the same expense, but done as a check versus a like debit card item. And so the check just comes in as check 1109. So then you have to take time to like go to your bank statement, look for that check, be like, oh, the memo I wrote on this was Purina Feed and Seed. Okay, so that was feed. And that takes a lot of time. Versus if you use, you know, a debit or credit card, it just comes in as, you know, pure feed and seed. And you're like, oh yeah, I know that was Purina Feed and Seed. I can just mark that as feed and then I'm done. So again, if you can minimize the use of checks, it will make your life easier from a bookkeeping perspective. Alan, anything you wanted to add there about what you've seen work well for folks?
Yeah, I think something to keep in mind as you kind of ingesting this information, especially if you're brand new and you've never done this before, is, you know, feel free to kind of take it one step at a time. Not everything has to be 100% perfect when you're setting it up. You will make some mistakes. But a tip that I would add there is, you know, if you're going to be wrong about something, whether the way you set it up or the way you track it, at least be wrong consistently, because that's a lot easier to then go back and then fix, as opposed to being wrong inconsistently, which is just going to create way more headache, you know, down the road. So, you know, just kind of, it is a journey to just go from doing nothing to really wanting a proper bookkeeping system. So, you know, you don't have to do everything at once. Start with the basics and then go from there.
Yeah. And January 1st can be a good time to make some of these changes in how you do stuff, because then you have it all consistent within that calendar year. All right. So in accounting, there's this thing called chart of accounts. So especially for those QuickBooks users out there, chart of accounts is basically accounting speak for a category. Now, the interesting thing about accounting and bookkeeping is there's 5 different types of accounts. So revenue, this is kind of one of the easier ones. This is just money coming in. You made some sales, you got paid for some services. You know, maybe you rent out land, you got some rental income, you want a grant. Most money coming in is going to be revenue. And then expenses, similarly, this is a pretty simple one. It's just like money going out, things you paid for. Now, there are 2 big types of expenses, like 2 big categories. So one is called cost of goods sold, which you might hear abbreviated as COGS. And a way to think about that is, if I want to produce an extra unit of whatever I grow or raise, I need another unit of this input. So if I want to raise one more broiler, I got to get, you know, one more baby chick, and I got to get a little bit more feed for it. If I want to sell, like maybe I do value added products, like I want to sell one more jar of tomato sauce. You know, I need one more like mason jar to put the sauce in. So those are the kinds of things that will go into the COGS category. And then basically everything else is under the operating expenses. And so that's stuff like, you know, just random supplies, your farm insurance, your utilities. Labor is one that can either go into COGS or operating expenses, just depending on like, you know, how your brain likes to think about this stuff. And of course, like operating expenses do generally go up as your farm gets significantly bigger. But like you don't need, you know, like $10 extra of property tax to raise 1 extra cow, for example. So that's kind of how you can think about splitting those 2 things out. And this is important because a lot of banks will ask for this, because you know, this helps them kind of figure out like, okay, at what level do you need to be producing to be profitable overall, given what your COGS are and what your operating expenses are. So one thing I'll say about these are the two categories that are like pretty easy to track on your own. So again, if you're new, if this is all kind of overwhelming to you, like just start with tracking your revenue and expenses. This is the most important thing. This is where 95 of your transactions probably are going to be, and these are the simplest to do yourself. Like, you know, I buy a bag of feed, I put that in the feed category, it's a COGS expense. These other three, assets, liability, and equity, are a little bit more complicated and can be like a little easier to mess up from a bookkeeping perspective. So, you know, they're still very doable to do yourself, just requires a little bit more thought. So assets. So this is basically things that increase the value of your business, the things that let you, you know, do what you do as a farmer. So like your land, your vehicles, your equipment, your tractors, you know, if you raise livestock, you know, your breeding stock, your cows and your bulls. If you have a lot of inventory on hand, that can count. And of course, cash in the bank, that's a very important one. There's a lot of stuff where it's like, okay, is this something that goes into supplies or something that goes into equipment? So maybe you buy like a new tractor implement. And basically the IRS tells us that if it's a piece of equipment more than $2,500, it is an asset. And if it's less than $2,500, you can put it in an expenses as supplies. So, you know, this is not the last time I'll say this in this webinar, but like sometimes the IRS just says things and we just go with it because that's what they say. So this is an example of like, why is the threshold 2,500? I don't know. But again, if you buy a piece of equipment that's more than 2,500, you should probably put it into assets. Liability. So this is basically like things that you will have to pay in the future. You don't necessarily owe them today, but you will have to pay them in the future. So the biggest one here is loans. So you'll have to pay back your loans. And then again, sometimes when you go to the bank and they want your financial statements, they also want to know like, okay, well, how much in taxes are you going to have to pay over the next 12 months? Like if you have employees or contractors, how much in payroll will you have to pay in the next 12 months? So for bookkeeping purposes, really just track your loans. This other stuff doesn't matter as much, but just, you know, on some bank forms and stuff, you'll have to fill this out. And then equity. This is basically like what you own. So the math here is literally just the value of your assets minus the value of your liabilities is your equity. When you're actually like doing your books, transactions that end up in equity. So if you make an owner distribution or investments, that basically means like you as the business owner, you know, put money into the business or take money out. That's called an owner distribution or investments, and that's an equity category. And then if you like, oops, I accidentally bought something personally using the farm credit card, you would mark that as personal expenses, which is also an equity category. And then, like I said, these three can be a little bit more complicated, so tread carefully. You know, if you need to prioritize, focus on revenue and expenses. Any questions on that? I know that part was a little dense. All right. Well,
We do have a question.
Okay.
The question was, will there be a tax preparation software recommendations with costs and pros and cons of each tax software option?
That's a good question. So, I'm trying to, some states are offering like direct file, but I doubt that direct file is going to support a Schedule F. Yeah, I mean, I've heard folks like use TurboTax and that has worked. There are a few others out there. I personally haven't tested them. Alan, I don't know if you've heard what folks have used from a tax prep software perspective, or like the Schedule F and the Form 4562 works well.
I mean, Intuit is definitely the biggest, and then most people will just kind of defer to a CPA. But yeah, not as common to see kind of like retail tax prep software aside from the biggest company, which is Intuit.
Yeah, and Intuit owns TurboTax, right?
Yes, that's right.
Okay.
Mm-hmm.
Yeah, so I actually don't know the answer to that question. But yeah, it is a good one. It is a good one. I would say in general, if you are a farmer and you've made a lot of investments into assets, like you've bought a lot of equipment or breeding stock or something that year, it probably is worth talking to a CPA, just because there's so many like agriculture loopholes and way to optimize your depreciation and that kind of stuff that sometimes getting a good ag CPA to help you is like, they'll get you more in a tax refund than you paid them. If you've got kind of a simple situation of like a small farm and maybe your spouse has a W-2, then, TurboTax or one of the other equivalents will probably be just fine for you. All right, well, we're going to do a little quiz about these different types of accounts. So if you are doing sales at the farmer's market, what kind of account is that? So is it revenue, COGS, expense, operating expense, asset, liability, or equity?
Okay, we're getting the answer of revenue.
Yes, good job. Okay, next one, insurance. You got to pay your truck insurance or your farm insurance, or maybe like workers' comp insurance. What would that be?
Okay, so the answers are rolling in. So we have split responses.
Between what?
So utilities,
Mm-hmm.
liability,
Mm-hmm.
operating expense.
Mm-hmm. Yeah, so generally this will be an operating expense. Sometimes, again, your bank might ask you to fill out how much are you going to have to pay insurance over the next 12 months, and that would be a liability. But once you actually make the payment, that becomes an expense. What about, you grow commodity crops and you sell them to the co-op or to the elevator? What would that be?
Okay, the answers are starting to roll in. Okay, so far we only have one answer. Let's see if we have a few more come in.
What's the one answer?
Revenue.
All right. The one brave soul got it correct.
Okay, now we're getting some revenue answers. Okay.
Yeah. All right, what about your power bill? Gotta pay for your electricity.
I think they're thinking about this a little bit more. Okay, so we're getting the answer for operating expense.
Yes, good job, guys. All right, what about feed? Feed for your animals.
Okay, so we're getting COGS.
All right, awesome. Everyone's learning a new acronym tonight. What about your land? If you own land, what is that?
Okay, we have a split response between asset and equity.
All right, it is an asset. It does tie into your equity. So again, it like what your land is worth minus any like mortgage you have on it would be how much equity you have, but the land itself is the asset. What about taxes? Got to pay your taxes. Reba, what was the answer on this one last time we did this? Like, someone said like extortion.
Which is great.
Yeah, which is not a bookkeeping type of account, but it was a fun answer nonetheless.
Right. So split response as well. So we have operating expense, liability, and asset was one.
Yeah. So usually, again, the actual tax payment will be an operating expense. The taxes you're going to owe over the course of the year are a liability. And yeah, whatever you manage to, not pay in taxes would go towards your equity. All right, what about your tractor?
Okay, everyone's saying asset.
All right, that was an easy one, I guess. Okay, what about the loan for your tractor? If you finance your tractor.
Okay, the answers are rolling in. Liability.
Yeah, good job. All right, and what about your payment on your tractor loan? You got to pay your, $1,000 a month or whatever it is.
Okay. Split response between expense and liability.
All right, you guys are both correct. So loan payments are tricky because you make one payment, but it includes interest and principal. And these two things actually go in different types of accounts. So your interest, your loan interest is an operating expense. So this is, one of the categories on your Schedule F. But the principal on the loan payment actually pays down that liability. So you put it on the liability category. That was kind of a tricky one. All right, and then the last one, your inventory. So, you've got a bunch of meat in the freezer you haven't sold yet, or you bought a bunch of supplies you haven't used yet.
Okay. Couple answers are coming in. Assets.
Yes. All right. Seeds. You buy, corn seeds, vegetable seeds, cotton seeds.
So split answer. We have COGS, and then we have expenses, and then one is COGS/asset.
Yeah. So assuming you don't put the seeds in the inventory where it would be an asset, this would be a COGS expense. So yeah, good job, everybody. All right, you buy a cow. Where does this one go?
Okay. So we have assets, and then it says depends on the use, probably asset.
Yes. Yeah, we tried to trick you with this one. So it depends on how long you're going to have the cow. If you buy a cow in the spring to graze over the summer and then sell in the fall, it would just be a regular expense. But if you, buy a calf and you keep it for more than a year, or if you buy a breeding animal, so, a heifer or a bull, then that would be an asset. So yeah, whoever said it depends, we tried to trick you and we did not manage to. What if you get a grant?
Okay. So the answers are coming in. So we have, it seems to be split between income and revenue.
Yeah, income and revenue are kind of mean the same thing, and a lot of things will use those two words interchangeably. And just one thing to keep in mind about grants is they are, if it's income and you don't track your expenses against it, it is taxable. So just be on the lookout for that. If you win a grant, make sure you keep track of all your receipts and expenses that went into that so you can reduce your tax liability. All right, last one, if you have a personal expense.
Okay, so we're getting the answer, a couple in there. Okay, so it's split. The majority, they're going for equity. We have one that says expense and then another one that says income.
Yeah, so this one would be equity. You can put in an equity account. Yeah, this one's hard. All right. Good job, everybody. So we've talked about categories, but sometimes folks like to track things not just in the categories, but also like which part of their business this was for. So, I'm just thinking about like, the categories are like this and the enterprises are like this. And so, you would have that's why you don't have to like layer it. I'm not doing a very good job of explaining this. But basically it's like a secondary way of tracking your expenses. So that way you can see like, okay, I had feed, but how much of the feed was like cattle feed versus hog feed versus chicken feed. And then like, okay, how much did I do in sales for each of those things? And like, let me see how each one of those enterprises did. So, and basically the like more complex your business gets, the more you will want these because the harder it'll be to keep track of all these individual things in your head. It does increase the complexity of the actual bookkeeping. So, but both QuickBooks and Xero support this. Most of the farm specific software also supports this. So like in Xero, you can see there's enterprises here where I can type in, beef, chicken, pork. And then when I have this transaction from July 9th, it lets me choose an account and then it also lets me choose an enterprise. And then QuickBooks, there's actually two ways to do this. So if you pay for a more premium version of QuickBooks, you get this thing called classes. And classes are basically enterprise. some folks get away with not paying for the premium version and using tags. And so tags, they're a little bit harder to do the actual like QuickBooks reporting on, but it still lets you track, what the different enterprises are there. Alan, anything else you want to say about enterprise tracking?
Yeah, to the kind of earlier point when we were talking about, taking things a step at a time, this is definitely not something that you would want to kind of attempt to do out the gate. You'd want to get those bookkeeping fundamentals in. And one particularly important part that you're going to want to make sure is really locked in is going to be how you set up all your products and your items on the sales platform that you're using. So whether you're on the e-commerce side, on the retail point of sale side, like Square, or if you're just, even if you're mostly wholesale and you're using like an invoicing system, you're going to really want to make sure your all of that data integrity is as tidied up as possible, where you have SKU numbers and they're tied to parent categories, so that when you export that data, or if you have like an integration with accounting software and Shopify or something like that, that the data can flow very seamlessly and allow you to actually get that, profit and loss by enterprise, um, as opposed to kind of what Alex was saying earlier. It can be tempting. You're on the fly, you're making a sale, and you're just going to kind of put, miscellaneous thing. And then in the moment, you know what you did, but when you look back a week later, you may not know what exactly was sold. And so we find that a lot of, the folks that we work with end up kind of in this predicament of wanting this information but not having done all that work up front, because it really is mostly a one-time thing with a little bit of maintenance, and it's definitely worth doing if you want this type of information.
All right. So yeah, talking about the bookkeeping process, the most important thing is just to keep up with it. Pick whatever process works for you. Some people do it, on the same day each month. Some people do it like every time there's like a rainy, ugly day where they have to stay inside. Some people get accountability buddies. Some people just say like, hey, I just need a bookkeeper or someone like Good Agriculture to do it for me. Just figure out a system that works for you and keep up with it, because this stuff gets so much harder to do, like the longer it's been since the transaction happened, because like you can probably remember what you bought from the feed store a week ago, but you probably can't remember what you bought a year ago. And so it just, the longer you put it off, the harder it gets.
Yeah, and just to kind of echo what Alex said there, I think the key here is just finding the thing that you're actually gonna stick with, because maybe you want to fit yourself into a certain mold or certain habits that sound appealing, but at the end of the day, it's not going to work for you. So like, while let's say monthly or even weekly is maybe the more ideal, if quarterly is the thing that you will actually accomplish, doing something, of course, is better than doing nothing and then letting that, stack of pending transactions that you need to look at. You just want to be careful with that and find what works best for you.
Yeah. Yeah. And speaking of, when to do what, so on kind of that weekly or monthly basis, or like maybe quarterly, but monthly is really a lot better. Just take some time to categorize everything. Check your bank balances and your financial statements, and just make sure everything looks right. Look for any kind of like red flags, like, whoa, I spent way more last month than I thought I did, or whoa, I'm like way more unprofitable than I was thinking. And then ideally go ahead and break down the interest and principal on your loans each month if it's easy to do. Just makes it easier to like not do it, each month as the payments come in, rather than trying to like fix it all at the end of the year. And then once a year, so this time of year is a really good time to review your assets and liabilities. So, maybe you've got a herd of cattle and unfortunately had like a death or two in the herd. That's a good time to like update those assets. You've got equipment, it depreciates over time. Once a year is a good time to enter in what the depreciation was that you know, you either put on your tax form or your CPA helped you figure out, and just make sure that's all up to date. And it's also just a really good time to evaluate how you're tracking stuff and say like, okay, what do I want to do to like kick it up a notch this year? Do I want to rejigger my categories? Do I want to start tracking enterprises? Do I want to like finally get that farm credit card and like split out all the expenses? Like I said, January 1st is just a really convenient time to make switches to stuff.
Mhm.
And then one heads up about, especially if you're using accounting software, a lot of them will have things called rules, where basically it's like every time you make a payment to Good Agriculture, it might say like, okay, this is accounting. I'm going to put this in the accounting category. Um, uh, and these can like speed up what you do a lot. But just be careful with the automation, especially all these software tools are like trying to add AI to everything, and the AI can be kind of dumb, especially when it comes to farm stuff. And it might try to like categorize stuff in a way that doesn't actually make sense. Or like what happens in QuickBooks if you use invoices, like trying to match the invoices can like weirdly double count stuff. So again, just tread carefully with this stuff and make sure you feel very comfortable with what the rule is saying. And then we recommend setting it up so that the software will tell you like, hey, I think that this is feed. Is this correct? And you say, yes, it is. And you click yes, versus auto categorizing, which is a feature QuickBooks has. But again, like that, you don't have the chance to review it before it just like automatically goes in that category. And you might get to the end of the year and you might be like, you know, why am I spending so much on office supplies? And then you go in there and it's like it auto categorized Home Depot, all of the like supplies and whatnot you bought at Home Depot into office supplies because you told it anything with Depot because you were thinking Office Depot was office supplies. Anyways, it's just the like the softwares can be kind of dumb, and so it just helps to like, you know, apply your common sense to it before you let it auto categorize anything. All right, so we're gonna go through each of the 5 types of accounts and just talk about like how do you actually do this on a month-to-month basis. So on the revenue side, there's like lots of different options here depending on how easy versus like detailed you want this to be. So option one, basically just like any money coming in, any deposits are sales, and you just put those in a sales bucket, and you're not necessarily tracking like what kinds of sales they are, but you just know these were sales. And so you can see option one, you get a deposit, you just put it in sales, you're done. It's super easy. Um, Option number two, if you use invoices, you can set it up so that, you know, let's say you had an invoice for $450 and then someone makes a payment for $450. Then oftentimes these software tools will be like, hey, this payment, this is this invoice, right? And you can tell it, yes, it is this invoice. And then it'll pull all of the detail from the invoice into your book. So if your invoice had, you know, this one's $400. So if this is like $300 worth of eggs and $100 worth of whole chickens, then it'll pull that data into your actual books and say, okay, 300 eggs, 100 whole chickens. Um, and then if you use e-commerce, there are a lot of times there's integrations with these accounting softwares. So again, so like here, if you got payments from your e-commerce software, so this is option number 3 and 4, I'm looking at the bottom here. So you got a deposit from Square for $48. Then if you've got Square integrated with your QuickBooks, then this is the QuickBooks example, then it would say like, oh yeah, this $48, this was, you know, 4 dozen eggs, and then it'll pull that in and put that in the eggs category for you. Some of the farm specific e-commerce platforms, so like Gray's Cart, Local Line, Grown By, some of those, like they don't have integrations because they're smaller companies. But a lot of them will have exports. So you can export all that data, upload it into your accounting software, and your accounting software will help you do the matching of like, okay, these 12 transactions match this deposit I got. And then you can get all the data in that way. So again, these go from simplest to hardest, but give you the most detail. And so just kind of figure out like where on this spectrum works for you. And again, this is something where you can like get more detailed over time if you find that helps you. Any questions on the revenue stuff? All right. Oh yeah, this is Alan already talked about this, but I'm just going to highlight this one more time. When you don't put your items and your products into your e-commerce, this is what the data looks like. So you had 3x square item, 2.2x square item. Like, this is not helpful. So, don't bother with all the work around integration if you're not going to have your products in there. Like, it's so helpful to just take the time this winter while things are quiet to just put that in there and then just use it all year. And you'll have so much beautiful data, and it'll just give you so much insight into what your business is doing. And so here is just, I'm just highlighting the square item thing again, because if you take one thing away from this, it's please don't do this. All right, so then expenses. This one is actually pretty simple. You put things into their categories. Again, the one thing to look out for is your loan payments. So you will actually need to do what's called a split transaction. And so basically you tell the software, hey, I'm going to make this like 2 line items instead of 1, where 1 line item is your interest and another one is your principal. And again, the interest is an expense, and then the principal is reduces the liability on the loan. And so you can kind of see how this looks in Xero. So we had a $1,500 loan payment, and we split it into $150 worth of interest, which is an expense category, and then $900 of principal, which went against the loan. All right, and then assets. This is where things start to get a little bit more complicated. So on a monthly basis, this is mostly just, dealing with your loan principal. But when you buy something, again, when you buy a piece of equipment or machinery that's more than $2,500, you should create a new asset for it. So what, and we'll go into like how to actually do that in the software in a little bit. But first I want to cover something called depreciation. So basically, most assets have a useful life that is more than 1 year. And so, but each year, it gets kind of used up a little bit. And so depreciation is basically accounting speak for like how much used up did you do it that year. Now, I will say the IRS has depreciation schedules on their website, and they have a bunch of different like how long the useful life is for tax purposes. The schedules like don't make sense. So like, for example, a new tractor has a 5-year useful life, but a used tractor has a 7-year useful life. And that just doesn't make sense. But again, this is one of those where it's just like the IRS told us to do it this way, so we're doing it this way. Now, there's 2 ways you can say like how much the asset is worth. So we generally recommend using the taxed depreciation. So you buy a new tractor, the IRS says it has a 5-year useful life, you depreciate it on your taxes for 5 years, and then at the end of those 5 years, the IRS says, okay, that tractor's not worth anything anymore. And so your books also say, okay, yep, that's not worth anything anymore. I don't have to depreciate it anymore. But obviously, like, you still have a tractor, and the tractor is still useful. And so oftentimes, we'll want to use market value of like, hey, I could sell this used tractor today for like, $10,000. And so sometimes you might want to put, okay, the tractor is actually worth $10,000. So again, in your actual books, we recommend using the tax depreciation. But then when you go to get a loan, or, someone needs to see your balance sheet, it can be helpful to just think through like, okay, these items in my books, like, the value is actually in real life higher than this. So I'm just going to make this edit like on this form. Any questions about that? All right, so then the next question might be like, okay, well, like, what kinds of things do I depreciate? And basically it's anything that is capital. And so most assets are capital, but not all capital are assets, but not all assets are capital. So like cash in the bank is an asset, but it's not capital. So capital is a type of asset. And so we're going to do another little quiz of like, which items count as capital? Which things have multiple year useful lives that I have to depreciate? So one, if you have a barn on your farm, got a building, got a barn, is that capital or is that not capital?
Okay, so we're getting the answer come in, and we see capital.
All right. Good job. What if you get a new hayloft for your barn? So you build a new hayloft. Does that count as capital or is that not capital?
Okay, we have an answer come in. Okay, everyone's saying capital.
All right, that was kind of a tricky one. So good job, guys. Yes, improvements generally count as capital. All right, your tractor. I already probably beat this one to death enough.
Capital.
Yeah, okay. That one was easy. All right, you got to get your tractor repaired.
I love one answer is not capital. And then we have another answer for expense.
Yep, that's correct. It is not capital, it is an expense. And repairs and maintenance is one of the categories on Schedule F, which is just expenses. All right, what about fencing?
Okay, capital.
All right, good, yeah. Yeah, and again, if it's less than $2,500 worth of fencing, then it's not capital, but usually it is capital. All right, you buy vegetable seeds.
I think you may have, okay, they're coming in now. Okay, so not capital,
Yep.
expense.
Yep, correct, that is an expense. You buy apple tree seedlings.
Capital.
All right, you guys are good at this.
Mhm.
Yeah, so fruit and nut trees, because they do have multiple year useful lives, generally are capital. You buy a stalker, so a cow that you're planning to harvest later that year.
Okay, so now we have a split response.
Oh,
So far the majority is not capital.
yep, the majority is correct on this one. Yep, so again, any any animal you're going to have for less than a year is generally an expense. And yeah, stalkers, generally you have them less than a year. Although, of course, if you get them super small and take them all the way to finish, then you might have them for more than a year and then they would be an asset. But yeah, most of the time they're not capital. What about you buy some heifers? So cows that you intend to use for calving.
Okay, so we have capital.
Yep. All right. I think that was it. Good job, guys. That one's easier. Okay, so then one funny thing about assets is if you finance an asset, then you don't have a transaction coming in that represents that asset. So let's take an $18,000 tractor. So if you buy it with cash, then you've got this, line on your bank statement that says, I bought a tractor for $18,000. And then this one's really easy. You just type in, this is a new tractor. I'm going to create a new account for it under assets. And it's like, all right, cool. You now have an $18,000 tractor on your assets. Good job. But if you finance the tractor, that $18,000 never actually shows up on your bank statement. It just shows up as your first payment of like, okay, your first monthly payment is $339. And so like, where do you put the $18,000 tractor? So you use what's called a journal entry to add things to your books that are not reflected like in the actual transactions. And so be careful with these. It is very easy to mess things up pretty badly using journal entries. So if you're not comfortable with this kind of stuff, this is one where I would get a professional's help. Make a list of like, hey, things I need to add to the books, and then get someone to help you with this. You can figure it out yourself, but just like really triple check your work. Type this in, post it, make sure that like the numbers showed up on your books the way you expected them to. And if they don't, you can always come back and void this thing and try again. So here and I guess, sorry, this was a $19,000 tractor. We changed the numbers a little bit. So here when you finance the tractor, you got a $19,000 asset, but you also took on a $19,000 loan. And so here you show the tractor asset accounts, and that that has $19,000 in it. And then you also have the loan, and that also has $19,000 in it. Now debits and credits, I would just Google like, debit credit for this type of accounts, like debits for assets and, credits for liabilities. It's a little bit confusing. I admit I do this for a living and I still have to look it up at each time. Like, do I use debit or credit for this one? So there's no shame in like not knowing exactly, but basically these two things need to be equal to each other. And that's kind of how the accounting software makes sure that like nothing crazy is going on here. Ellen, anything else you want to add here?
Yeah, so of course, just always, I mean, just to kind of reiterate what you said, journal entries can be very tricky. In fact, you could get even just like a little cheat sheet if this is something that you find yourself needing to regularly do. That's kind of something that even seasoned bookkeepers or accountants will do is just to see how debits and credits affect each individual, assets, expenses, revenue, liabilities, and equity. Just because there's some kind of funny math going on there. But well, yeah, just be careful there when you're doing that.
So we do have a question in the chat as well. So the question is, what about layer chickens that can last more than a year but may perish due to weather or predators, etc.? And then to add more context, so she buys 300 layers of a year, but only about 150 survive due to predators.
Yeah. Yeah. So this is where you would want to this is like a good thing to, so it's to your first point, the layers would be capital because they do have a multiple year useful life. And this is a good thing to update at the end of the year and say, okay, when I bought these chickens, I had $300 of assets worth of laying hens. But now, 150 of them just, perished. And so I would need to adjust that asset at the end of the year and say like, okay, we took 150 losses basically. So that way at the end of the year, my balance sheet says I have the right amount of assets remaining. And making that adjustment is also something you would use a journal entry for, because obviously there's not like a line on your bank statement that's like, the wolves ate 150 of my laying hens. If you guys can find an agriculture bank that has those transactions for you, please let me know. I'd love to use them, but they're not able to do that yet. And then here's just like an example of a loan statement. And you can see it breaks out principal and interest for each month. So each month you're like, okay, it's April 17th. I know that I paid $71.68 in interest, and then $268 was paid down on principal. Liabilities. Okay, so this one, from a month-to-month perspective, also doesn't require that much maintenance. If you take out a new loan, you would definitely want to add that to your liabilities. Again, you would want to do a journal entry for that. Actually, you may not need to if it's like an operating loan and they just give you cash, then you just mark the cash as a new loan. And that one's pretty easy, doesn't require journal entry. And then on a month-to-month basis, just make sure you're breaking out principal versus interest. Again, this is just much easier to do each month when you make the payment rather than at the end of the year trying to like true up, what the balance should be. Current liabilities, again, like if you go to get a bank loan, they may ask you for this, but like honestly, you don't need to do this on a monthly basis. Unless you're like your business is getting really, really big and you kind of have to like take the accounting up to a next level. And then equity, again, most of the transactions are going to be happening here is like you as the business owner either putting money into the business or taking it out. And those would just be owner investments and distributions. Or if there's a personal expense, like I have a line item for Home Depot and like, whoops, that was for personal stuff. I would just mark that as personal expenses and it would go into the equity accounts. If your farm has multiple owners, so maybe it's like a partnership with you and your spouse, or maybe there's like it's a co-op with like half a dozen owners, you can split these equity accounts into multiple owners, and that can help you keep track. So like if there's 4 owners and everyone's getting an equal distribution out of the business, then you would take that. You might take that one distribution and like split it into 4 different transactions with each person's equity account on them. But yeah, unless you have owner investments, distributions, or personal expenses. There's really not a lot of like active management here. Equity is mostly just a calculation of assets minus liabilities, which the software will do for you, or your Excel sheet can do for you. All right. Any questions on how to handle any of the like 5 different types of accounts on a month-to-month basis? Okay. One note, so your bank and card, oh, sorry, go ahead, Reba.
So we just got a question come in. So if you are splitting payments between principal and interest on a monthly basis, are you just tracking amortization and depreciation on your spreadsheet?
So, amortization and depreciation, these are more about like your assets depreciating. So I don't think loan payments and loan schedules generally have those baked in. Normally this is something you would have to do separately in your books.
Yeah, and I could add more commentary there. I mean, so like some will have maybe a more standard formula to calculate interest based off an interest rate and a period. But then we've noticed different financing institutions kind of like to come up with their own unique ways to finance things. So generally just asking them for a statement just so you can see the most up-to-date principal balance, the total interest paid so far can be like a nice step if you're just trying to go for, I just need to know what is true as of the most recent date possible. So that's another way you can get that information.
Yeah. And when it comes to like monthly tracking, most people don't depreciate their assets each month. You can. It's not a bad thing to do. It's just most of the time it's not strictly necessary. Usually like, okay, last year I had, I'm gonna make the math easy, like $24,000 worth of depreciation between all my equipment and tractors and vehicle, etc. So then like this year I can estimate that my depreciation is roughly $2,000 a month. And you might get to the end of the year and say like, oh, actually it was more like $2,300 a month, but that estimate is still generally good enough for that month-to-month bookkeeping, and then you kind of true it up at the end of the year for tax purposes.
We have another question. Going back to chickens. So if you have the flock insured and you get a payout for the ones that were lost, how is that in bookkeeping?
That's a great question. And actually, yeah, we should probably put insurance payments as one of the revenue categories, because insurance payouts are revenue. Let me pull it back up Schedule F. So let's see. So yeah, you can see part 1 above the yellow box. You can see number 6, crop insurance proceeds in federal crop disaster payments. So that is one of the revenue things they will ask you about. But yeah, that's a really good question. And then, usually when there's an insurance payment, you had some expenses. So like, yes, I got an insurance payout, but I had to go buy new chickens. So the expenses would go up as well. So from a like profitability perspective, there's not a huge impact. But yeah, you'd put that insurance payment into revenue, and then like chicken expense you're now incurring back into expenses, or assets if they're layers and you expect to have them for a while. Good questions. All right. So I don't know who put so many transitions into these slides. Okay, so a note on bank and credit card fees. So these things, if you're using accounting software, will save you a ton of time because you don't have to type like every single transaction into your books. But they don't capture everything that's going on the farm. So if you work in cash, so your customers pay you cash and then you use that cash to like pay some of your expenses, those things won't show up on your books automatically. You will have to add them in. Vehicle mileage. So there are 2 ways to track vehicle expenses. You can either track the mileage. So I drove 100 miles. The IRS says I can count 70 cents per mile. So that's $70 worth of mileage. Or you can track actual expenses. So, I had to buy some gas, I had to get it repaired, I had to pay my payments. And you can pick one of those two, but you can't do both. And generally, if your vehicle is newer, it's better to do expenses because you can put the depreciation in there and that'll give you a bigger tax deduction. And generally, if your vehicle is older and if it's already fully depreciated, generally mileage will give you a bigger deduction. So that's just kind of the rule of thumb with vehicle mileage, but make sure you add it in if you need to track mileage. I'm sure there's a lot of folks who live on their farm. And so if you've got like, your utilities, like power your house and your farm, but you only pay one utility bill. If that goes onto your personal account, make sure you make a note that whatever fraction should go to the farm, like makes it onto the farm's books every month. This can also be like a good thing to do at the end of the year. Just do it once based off like what you paid total for the year. And then of course, transactions that accidentally went on your personal account. So you went to Home Depot to buy something for the farm. You accidentally used your personal Home Depot credit card. Just make sure you add that in to the farm book so you don't lose that deductible expense. And so you can see like how you might use a journal entry to add that in. So this is an example of like a water bill where we're splitting the water bill 50-50 between the farm and you personally. And so it was a $150. I guess the bill total would have been $300, but the farm paid for half, so paid for $150. We put $150 of that into utilities, and then the other $150 is almost like you making an owner investment into the farm because it's your personal water bill, so that would go as a credit there. So again, journal entries are complicated. Be careful with them, but so it may just be good to just like have a list of things you need to add to the books and then just do that at the end of the year with maybe some professional help. Or treading very carefully with journal entries. All right, so that was kind of all the like bookkeeping stuff. We're gonna do a super quick overview of financial statements, which is like why you're bothering to do all this bookkeeping in the first place. We're going to do a much deeper dive onto financial statements and what to do with these numbers in our third webinar in this series. So I think that one will be in February. So if you're interested in digging more into this, please stay tuned. But there's three main financial statements. The first one is an income statement, and this is also called a profit and loss statement. So you got your farm revenue, you got your cost of goods sold, you got your farm expenses or your operating expenses, and then it'll tell you your profit. So there's three different kinds of profit. So gross profit is your revenue minus your cost of goods sold. And this is a really important number because if this is negative, this means like the more you produce, the more cash you are losing, which is really bad. So if your gross profit is less than zero, that is really bad. You should be really worried about that. Most people like to see this kind of, at least 40%. So that way they've got plenty of cushion to handle their operating expenses as well. And then your operating profit is, you might have guessed it, you subtract out your operating expenses and that tells you, how much profit you're making. And then things like interest, depreciation, amortization, taxes, sometimes get pulled out into their own separate category. And then that's called net profit. So, here's an example farmer. She's net unprofitable. And this is just helpful for her to know. The next one is a cash flow statement. So this is basically like, how much money do you have in the bank? And the reason why this one is really important is because farms are seasonal and you got to buy everything up front. And you have to make big investments into capital and your equipment and whatnot. And so it is very easy for a farm to be profitable, but cash flow negative. So this farm is a good example. So you can see net profit is $6,700, but total cash is minus $11,000 for the year. And so this farmer, if they started the month with only $5,000 in the bank, they're going to be in trouble by the time the month closes out. So this is a very important statement for, is my business going to be able to make it another month? And then the last one is balance sheets. And this is basically just like, how much wealth do you have? Like, how much is the business actually worth? So you got all your assets on the left-hand side, you got all your liabilities on the right-hand side, and then you've got equity at the bottom, which is basically assets minus liabilities. So this farm is worth $60,000 to the owner. There are also some good balance sheet ratios out there. So these ratios basically just are looking at different things. So debt to asset ratio, so they'll take your liabilities compared to your assets and do some math there. And you can use these benchmarks to just kind of see where you stand. Now, it is not unusual for new farms to look weak, and that doesn't necessarily mean it's bad. It just means that, the farm is newer and, they just need to work hard on getting, to a financially more stable situation. So these can be just kind of helpful guidelines just to see where you are, and hopefully, you see the numbers improve over time. Again, if you have more questions about the financial statements, we'll go a lot deeper into those. So before I get into other tools and resources, did we have any other questions we wanted to tackle? All right. So we've honestly mentioned a lot of this as we've gone through. So, there's lots of accounting softwares out there. There's lots of good sales tracking software out there. So, Square, Shopify, all the farm specific things. There's also farm management software, which can, some of these things have bits of accounting in them, which can be helpful. And then if you're not ready to go the whole software route, there's a lot of good Excel templates and spreadsheet templates out there. So we have some, we'll share those with you. Veggie Compass is also another good place that has templates. To the earlier point of find something that works for you. These templates are all a little bit different. They all work, but they're all just kind of structured in slightly different ways. And some of them might just resonate more with your brain. And so you should just, again, use what works for you. And if you look at all this and you're like, whoa, I don't want to do this. This seems hard and time consuming. Do hire a bookkeeper. We are bookkeepers. And so I think that this is where I hand it back over to Reba to kind of talk through, what we can help with.
Yes, and we did have a question drop in the chat.
Oh, perfect.
So I just want to ask this. So someone is interested in farm management software and any recommendations that we have, and then also asked if you have any thoughts on Farmable.
Yeah, so the hard thing with the farm management softwares is it depends so much on what you are farming. So Tend is really good if you're doing mixed fruits and veggies. And Farmable I actually haven't heard of. But I would basically ask other farmers who are growing the same thing you are, raising the same type of animal you are, what they like to use and what works best for what you are actually growing. So sorry, I don't have a great answer there. Our customers use a gazillion different things, and there's a lot of good ones out there.
Okay. No more questions in the chat. Okay, so everyone, we want to thank you for joining us. We know that after a long day, spending an hour and a half talking about bookkeeping may not be the funnest thing, but I'm glad that we were able to talk with you and you were able to ask a few questions for us. I want to let you know that we are running a year-end discount for farmers who want bookkeeping support going into the new year. So if you sign up by December 31st, you'll get $200 off of onboarding and 40% off your first 2 months of bookkeeping. You don't have to start right away, but if you do sign that agreement, we'll be able to honor that into the next year. So whenever you're ready, we'll be ready for you. And then Alex, if you want to go to the next slide. And also, we have a farmer referral program. So it's a thank you for our farmers. So if you send another farmer our way and they decide to join bookkeeping, we'll send over $100 thank you check. It's our way of appreciating you all for sending those farmers to us, because we know that that's how most of information really comes around that way.
Mm-hmm.
And then finally, I want to let you know that we are doing our preparing for tax season webinar. Because you all are registered for this webinar, you'll also get another, you'll get invited to this as well. So it's coming up on January 20th. And it's an hour and a half, just like how we did before. But this time we're going to dive deep into taxes. So thank you all. And then we do have a question on how is it possible to get a quote? So in order to do that, I will drop a link to our meeting link so that way you can find a time that works for you and then we can give you a quote. And it'll be a quick 15-minute call where we ask you a few questions and then we'll get the quote for you.
Yeah, but we strive to be the most affordable provider out there. We use a lot of our own software in the background to kind of streamline ourselves. So pricing does start at $75 a month for those kind of smaller, simpler farms, and that includes the cost of the accounting software. Now, as your farm gets bigger and more complicated, you got e-commerce integrations and a lot of transactions and stuff, like we do kind of price accordingly. But getting good help might not be as expensive as you think. All right. Well, yeah, we can hang out for another minute or two to make sure no one has any last minute questions. And I will, let's see. Reba, do you mind dropping our contact information into the chat just in case people have questions that come up later?
Yep, not a problem.
We post this live, our contact information, to put that up for another minute or two. Yeah, so this is how you can reach us. And if you have questions for Alan or me specifically, we're just alex@goodagriculture.com and then allen@goodagriculture.com. And Alan's name is spelled Allen. Right, anyone have any final questions? Feel free to raise your hand as well. So that way we don't accidentally end this on you before getting to what you need. All right, I got a hand raise. Shanti, feel free to write it in the chat or just come off mute and ask your question. Actually, do we have the capability to let people unmute themselves, Reba?
Oh, there we are.
There we go.
Hi. No, thank you. I did send a quick note, but I was just wondering if it's possible to get a this at the beginning of the session because I joined a little bit late today.
Yeah, we'll send you the recording.
Okay, great. Thank you.
Yeah.
Gotcha.
Yeah. Yeah, we'll make sure everybody has access to everything.
Okay.
Cool.
We have a few more typing in the chat, so I just want to make sure
Cool.
that we're not missing any questions. So yes, the recording will be available. We will have that up on our website and on YouTube. So anyone who did not register, they'll still be able to view the webinar.
Yeah, or rewatch bits that you needed to go over again.
Okay, that seems to be it. So thank you all for joining us for our first webinar for the winter webinar series. We look forward to talking with you. If you need a quote, you can feel free to send a farmer our way, or we'll see you next time on January 20th at our Preparing for Tax Season webinar.
Happy holidays until then.
Thank you all.
Thank you. Bye.
Bye.
Bye.